CIBC has a bunch of mortgages on their balance sheet that have been flagged by the regulator for exceeding banking regulations when it comes to the amount of money lent and the loan to value ratio. So what is going on here? It's just kind of crazy that this goes on and people don't even think about the banking system and how fragile it really is. CIBC under banking regulators remediation orders to fix mortgage underwriting lapses. So what's going on? So CIBC has been under remediation orders from Canada's banking regulator for more than a year after an audit of its mortgage portfolio uncovered breaches of rules that limit how indebted borrowers can be. So that's, for example, like let's say you have a mortgage and they limit the LTVs to 80% on the uninsured mortgages. Well, that then means that you can't go out and get a home equity line of credit for the 20% or whatever. But that's exactly what's been happening, obviously. I mean, this is one of the most indebted countries in the world when it comes to households. The issues involve thousands of clients, many of whom had lines of credit that were secured against their homes. When these lines were combined with a CIBC mortgage, the total credit available exceeded allowed regulatory ratios, just as I explained there. The problems discovered did not involve fraud, the sources say. I find it interesting that they've pointed that out because how do we really know that for sure? Anyway, I'll leave you to decide and be the judge on that one. So as an example, a client seeking a mortgage with CIBC might already have balances outstanding on home equity loans or other lines of credit, either with CIBC or another lender, that could push them above acceptable thresholds for debt obligations relative to their home's value or its income. And it's really interesting because I've also heard about people gaming the system when it comes to the two credit ratings agencies that you have that basically are Equifax and TransUnion. You've got some banks that are with Equifax, some banks that are with TransUnion, and sometimes they're not checking both of those credit agencies to see what the client's credit is like and where they've got different loans and stuff. And people have been gaming the system in that way. I've heard all online about it. And it's just anything really. When you have the most indebted households in the world, this is what's going to happen. Oh, of course, you're going to have people just doing whatever they can, gaming the system to try and get in as much debt as possible to continue with the housing Ponzi. So it's really interesting that that's going on, but it gets more concerning here because it says CIBC continues to find new batches of problematic mortgages on its books, even in recent months, the sources said. And what started with the bank's retail clients has expanded to include clients in the bank's Simply Financial brand, CIBC's digital-only banking subsidiary. So, you know, does that fill you with a lot of confidence, the fact that they keep finding new problematic mortgages? And, you know, that's even if they know. That's if they know that those people aren't lying to them, which they don't. How can they possibly know whether it's fraud or not, or whether there is a lot of fraud out there? Of course, there's a ton of fraud out there when it comes to these types of lines of credit and different things. So I just find it hilarious, but, you know, it is what it is. The bank still doesn't know the full extent of the issue and has already spent tens of millions of dollars screening for problems, creating remedies, according to one of the sources. Internal estimates suggest it could take as much as 2 or more years to fully solve the problems, the sources said. However, the cases are not expected to result in noticeably higher losses on loans or have any material financial impact on the bank yet. But doesn't it kind of show you the fragility of the whole banking system? The fact that they're finding all these problematic mortgages, the fact that they don't actually know how many they have on their balance sheet, and it might take them years to comb through them and find them. And they aren't even accounting for all of the fraud, all of the people that have committed fraud on their balance sheet, because there's going to be a hell of a lot of people who have, because that is what typically happens during the last stages of a bubble, and we've really seen ramp up. So Canada's banks are highly regulated, and it is considered serious when the regulator compels a bank to take remedial action to clean up its problems. We'll see about that in a second. I'm going to show you something which shows how well regulated the banks really are. It's just a hilarious sort of, it's just more corruption, guys. You know how it goes in Canada. In April, Tolga Yalkin, an assistant superintendent at OSFI, said at an event that extending mortgage amortization periods to help borrowers afford higher borrowing costs threatens to keep Canadians in debt for longer and threatens the stability of the financial system. So they are coming out, the regulators, and saying this threatens the stability of the financial system. The Bank of Canada also acknowledges it. So why are they doing nothing about it? And I think that is key question to ask here. And it's because when you look at the regulators, as we will in a second, they are entirely corrupt, as you would imagine. Same with the CMHC, which we'll go into in an entirely different video. CIBC has higher proportional exposure to Canada's mortgage market than any of its big rivals, with mortgages and other loans secured against real estate making up about 55% of its loan book. And we'll go into its loan book in a second. Trillions of dollars in mortgage debt is what we're talking about here. And this is how it's ramped up over the past couple of decades. You can see it's well over 2 trillion. It eclipses even the GDP numbers right now. It is just unbelievable the amount of mortgage debt that is outstanding. And we're just talking about mortgage debt. We're not even talking about private debt held by private corporations. So now let's take a look at the corruption at the OSFI, or should I say, can you really trust these people? Because that's really the question that it boils down to it. Can you trust these people to regulate the banks? So let's take a look at the superintendent at the OSFI. We can see what he's done in his past right now. He previously served as president and chief executive officer for CDIC, which is basically another government venture to insure deposits, because you know the banks they can't be trusted to secure people's deposits because of what they do, because of the rampant lending, the ridiculous amount of lending that they've done. They can't be trusted. So we need this CDIC, the government, to step in and say, yeah, we'll insure the deposits just for the stability of the banking system, because we need that. Otherwise, people would be worried and ejecting all their money out the banks right now. So that's interesting that he's been on CDIC. And prior to that, he was in the Department of Finance. So he's done various jobs in government. And before that, it's really interesting, Mr. Routledge has held a variety of leadership roles in the financial service industry, both in Canada and abroad. He served as Managing Director of Research at National Bank Financial, where he led a team of responsible for producing equity, fixed income, and derivatives research on Canadian financial institutions. So basically, this guy is a banker, and he's come from the financial institutions themselves, and he's now the guy who's regulating the financial institutions, and he's also gone through the woodwork of the government corruption. I hope you can see how the government is in bed with the financial services, like all the banks. The government and the banks, they're in bed with each other. It's impossible to deny that anything other is true than that. And when you look at the CMHC, it's the same thing. You've got people on the board of the CMHC, and guess what? They are from banks. They're from financial institutions. Of course, they really give a shit about you or I. They don't care at all. And this is how we've got to this point. I hope it's obvious to you. It's just the system is so corrupt and people just can't understand it. They don't know it. Now, I know there's an argument. People could come at me and say, well, Luke, he needs to come and have this background of working in the financial services. Okay, maybe that's the case, but why can't they get somebody from afar, from another country, who's worked in a different banking system, who's more independent? Why are they getting people that have worked for Canadian financial institutions? And I know some people will say, oh, well, Luke, they need that to understand the financial system. No, they don't. They don't. They only have that because the whole system that we're in is completely corrupt. And I'm sorry for my rant, but it does annoy me because it boils down to corruption as a lot of the reasons why we're in the predicament we're in right now with the financial system in such a precarious place is because of these lunatics sneaking in under people's radar and nobody knows about it. I mean, who else have you seen a video on YouTube done who has said this about Peter Routledge, the fact that he is just essentially a banker and he's the one meant to be regulating the banks. Who's going to do a video like that? And that's precisely my point, and why I'm here doing these videos is because it just has to be said, the corruption. Now, what I want to also show you is what is going on with the 5-year bond. Kind of insane, because we've seen this thing ripping higher. So, you know, the 5-year bond has been ripping higher. It's pulled back slightly over the past couple of days, but, you know, you're at the highs right now. So the risk of default for a lot of people and foreclosure as they renew their mortgages is getting higher and higher and higher. And we had the Bank of Canada, of course, raise interest rates again, despite warning of all these people who are basically in negative amortization, which back in 2008, after 2008, in the US, they were calling that predatory lending. Here in Canada, oh, this is saving the day. This is fantastic. Why? Why is this allowed to happen? And if it does threaten the stability of the banking system, why is nobody doing anything about it? And there you have it. You know now, because the whole system is completely corrupt. And I hope you realize that it doesn't matter whether you have Trudeau Liberals, Jagmeet NDP, or Pierre Conservatives in. It won't change the system. It won't change the corruption. It's just not going to happen. You think these guys are going to do anything? They're not going to do anything. It's embedded in the culture of this country, unfortunately, and it has been for a long time. So I want to show you this about CIBC as well, so you can get an idea of their mortgage portfolio size. So currently, right now, 263 billion in size. Their HELOC portfolio, 19.1 billion. Now, percentage of mortgage portfolio uninsured is around 80%. That's insanely high, like RBC on the video we did yesterday. So that shows you it's very, very high, but the LTV ratio is low. But that's if you can trust that number. Can you even trust that number? Because if there's a lot of fraud, that number's not even correct. And what does that mean for the bank? Because even they don't know, and they can't properly allocate risk. I mean, not that they're going to properly allocate risk anyways, but they can't even understand that number if there's a lot of fraud that's going on, which there is because of all this mortgage insurance complete bullshit, which just creates insane moral hazard. And we've seen that in Canada. So, you know, the past 90 days past due, very low. This is Q1 2023. Probably gone up a lot since then, I would imagine. And then provisions for credit losses. I mean, look at this, guys. $75 million they've got provisions for credit losses. That is it. It's not really that much, even if it was $750 million, because they made a typo here. So let's assume they made a typo here. But if it was $750 million, that's still nothing. We're talking about a mortgage portfolio of $263 billion. If you assume you're going to have similar defaults to in 2008, which would be a daft assumption considering the amount of debt we have now compared to back then. And let's say you're assuming they get to like 10, 12%. Then 750 million is not going to be enough. It's not going to be nearly enough for credit losses. And they're doing this for a reason. It's because it affects their earnings and they don't want to essentially allocate more money to that, because that's not going to please their shareholders, and that's not going to get them those big bonuses that you and I know bankers love to get, those insane bonuses that they have. You know, this is a crazy world that we live in right now. But, you know, interest rates, where are they? Well, you know where they are. And quite frankly, they could be going up again. We really don't know at this point. All bets are off on what they do next. I have no idea. I'm not even willing to predict. I just have no clue. I'm 50-50 on it. But if interest rates rise even further, that's just more pressure in the financial system. But quite frankly, in my opinion, you don't need any more rises in interest rate. The colossal amount of pressure that they are putting on all the indebted households in Canada has already put us into recession. They just don't know it yet, and the labor market hasn't felt it yet. But you're going to see that towards the end of this year by the time these clowns even realize it and start cutting rates, it will be way, way too late. And then if they come out with government stimulus programs again, you can see inflation taking off. They might not even get down to 2-3% because they'll be hiking rates up to 7-8% because of the inflation. So, you know, you can see this scenario we're heading into, and it's volatile. It could go so many different directions. It's very, very risky right now to invest any amount of money like you've got some sort of idea what's going to happen in the future. It's just, there's a lot of unknowns that are happening out there. So we'll have to continue to monitor it and wait and see. So anyway, if you've enjoyed this video, you might like that video there. You might also like that video there. Back in Calgary for you today. Thank you so much for watching. See you in the next.